Hi, John Pollock. Thank you for joining the leaders list.
Very happy to be here.
Yeah, it's great to see you. Um, I've got one very important question before we kick off here. Is there anything I can do about my 2020 taxes?
Other than file them, no. I'm assuming you're saying to reduce your taxes. No,
Yes, I want to. Is there anything I can do to save some money in my taxes tomorrow?
no. So think of it this way: December 31st, a wall is built. It's a really, really tall wall, and you're on the other side of it. Can you throw stuff over it? Yeah, I mean, you can set up an IRA, but most of your listeners are not setting up IRAs in January, February, March, or April of the new year. So there's really not much they can do. All tax planning is proactive. You have to plan now for what you're going to do for your filing April 15th, 2022. So you're always doing what your planning should be now for next year.
Good.
So, and there's a ton of stuff you can do, but not much you can do retroactively.
Yeah. So let's talk about it because that's really at the heart of it. That's we're talking about 2021 now because the subject today is going to be about tax planning versus accounting, right?
hmm
Maybe you can give us just a little bit. That may be the difference what you just
That is, I mean,
described.
I think you may have just summed it up because planning is it, and a lot of people think they're connected. They think, well, I already get this, John, from my CPA. No, you do not. A CPA, the A, is accountant. Look up accountant in the dictionary. Think of accounting as they're almost like a blue collar factory worker. They or white collar factory worker. They just crank through the numbers. Or they're a numbers historian. They take what you've already done and they record it as effectively as they can. They should really be recording it for two ways. One, following GAAP, so they're not breaking any laws, so that when you report your numbers, they're legal reported. And number two, as effectively as possible, that they can generate the numbers so that you can actually help make better decisions. That's their job. Take what you've done, record better decisions. What we're trying to do is we're trying to shift people into a more proactive mode and teach them how to lower their personal income taxes, lower the taxes for the company. And in most cases, taxes don't really get paid by the company. This is a thing I have to say when I'm getting interviewed during a political season is that businesses don't pay taxes, people do. So, your business, well, many of you think, well, my business pays taxes. Well, not really. You push that off to the consumer. If I raise your taxes, you're going to raise your prices and push it to the consumer. So,
Mm.
but if you can manage your taxes like Apple does by setting up a company in Ireland, you may not be able to do that at that scale. But there's lots of things you can do within the U.S. tax code that will make your business a lot more efficient and better for you and your customers because you'll be able to keep your costs down.
So, John, as a CEO in an SMB, my accountants are probably my accounting team. They're giving me good counsel, right?
Maybe as it relates to what we already talked about, but not about anything proactive. It's
Not about
not,
the tax planning.
yeah. So they're not good at the forward. And I've been trying to toy with this in my head for a decade now. And because it's easy for me, and it's easy for most of your listeners and you to be proactive and visionary. I mean, they are visionaries. That they're kind of their job is to take all these pieces, understand them strategically, and then launch forward into the new world with the information they have. There are people in your staff that can't do that. And we need those people. So it's good that they can't do that because we want their minds focused on the thing they're focused on. Accountants are very narrow. They're like the racehorse with the blinders on. They're straightforward. They're not strategic. And they're very fearful. Keep in mind that double ledger accounting is from the 1600s. Anybody that gets into the accounting business is choosing to go into a business that was designed 400 or 500 years ago. It's kind of nutty. There's not a lot of things that we're doing in business that are still 400 or 500 years old. Double ledger accounting is. The tax code may be new, but accounting is not. So they're good at recording, and there's some comfort there. I mean, if I like recording numbers, I love the fact that the laws don't change that often,
Hmm.
and I can do that. But they're not good at strategic, creative thinking. You don't typically want a creative accountant anyways.
Well, yeah, so as soon as I hear that, there's 2 things that come to mind, creative accounting, and I immediately go, audit,
Yeah,
right?
audit
Because
or
so much of
laundering
what
money at a pizza parlor.
yeah, exactly. So much of what we've done has been, when you hear about accounting or tax season, it's fear-based,
Yes.
right? I'm worried about all I wanna do is make sure that I don't have a problem, and so, I mean, I'm sure you hear that all the time, right? How do I just not get audited?
Yeah. So the first thing I do is I kind of back up and I say, what are things that you do that have risk? Getting out of bed in the morning, taking a shower. These
Right.
all have risks. And the risk is actually not that high of getting out of bed or taking a shower or driving a car. Um, but what's interesting is that we tend to, as humans, assign more risk to things that don't necessarily have it. So what I have to do is I have to get the CEOs to think strategically and think unemotionally. Their fear is an emotion. That fear should be based on statistics. So what's the statistics? The statistics are the likelihood of being audited for an S or a C corp is a half of 1% or lower.
Wow.
I mean, my statistics of slipping and falling in a shower is lower than that. So the statistics are very low. And what's interesting is that we're not telling you to violate the law.
Right.
That's where audit risk comes in. I'm telling you, this is the law. Here's the Internal Revenue Code. Follow it. Save lots of money on taxes. And then people say, well, what if I get audited? So here's the analogy I use. The most dangerous part of a driving experience is an intersection. I can drive through an intersection because there's no stop sign. I can drive through an intersection because there's a green light. There's lots of ways I can cross the intersection with lower risk. It's still an intersection. Anyone can run a red light. But if I told you never go through an intersection because there's always a risk that someone's going to break the law and hit you, that's not a way to live. That's how accountants think about tax planning. Don't ever go through the intersection. What it
Wow.
doesn't cost them any money. I actually had a client come in, great company. I think he sold it, and he went to his accountant, and I told him, your accountant's going to not want to do this strategy. It was going to save him a $500,000 in personal taxes per year. And the
Mhm.
accountant's like, yeah, I wouldn't do that. And he asked the accountant, is it legal? Well, yeah. Is it moral? It's moral. Is it ethical? Yeah, it's ethical. If it's legal, moral, it's obviously ethical. Well, then why aren't you doing it? I don't know. I just don't feel comfortable with it. A lot of people think that accountants, because they're numbers people, are infinitely logical, but they're human. So they're just as fear based, and in some cases, more fear based because they have to deal with a lot of laws.
Yeah.
So we
So
want
it's
to get
almost
people to focus on strategy.
yeah, yeah, and it's almost a CEO's fiduciary responsibility to pay attention to those opportunities and to take care of the stakeholders and shareholders. And that kind of speaks to this idea of how involved should a CEO be in tax planning? You know, like where's their role? Because I think a lot of CEOs will say, well, that's, that's my controller's job or my CFO's job, and they're going to manage that. Where's the CEO come into play in that process?
That's their job. I mean, really, a CEO's job is to connect the silos. A controller's job is to get the numbers in the right boxes at the right time in a consistent manner every single month so that you have the numbers to run your business. So that's their job, and that you can report to whoever you need to report to, whether it's bank or shareholders or boards or whatever. So that's the controller's job, is to control the numbers. Your job as a CEO is to make sure that those numbers are translated into something that helps the business run better. Controller's job isn't to do that. CFO's job is typically more strategic
Hmm.
um, with the numbers, but the CEO's connects all the dots. So this is what this is what your type of business does. Is it frees your CEO mind to kind of focus on these silos. An
That's
example
right.
I like to use, and we talked a little bit about this before we started, was this health insurance thing. CEO's like, oh, health insurance? That's HR. That's a silo. That's their job. Which, by the way, HR is not even really good at health insurance. They're good with their people, but health insurance is highly, highly complex. And the
Yeah.
HR doesn't want it on their plate. So the health insurance guy comes in, says, I can lower your cost by 10% this year. You're going to get, this extra thing. And the HR person's like, great, where do I sign it? And get out of my office. I'll see you next year. Well, there's a strategy that an HR person is not going to know about. Your health insurance person advisor may not know about because it's not premium based. The health insurance advisor makes all of their money from the amount of premiums that they sell you. And so a strategy that eliminates premiums will never come from a health insurance mouth. So we have a strategy that's tax based, that is a wealth management based, and is risk management based all in one. So the accountants don't know it, the wealth management guy doesn't know it or gal, and the risk insurance person doesn't know it. Isn't that the job of the CEO to find that and connect those dots? So
Mm,
that's what these type of I mean, your business is a lot about is to free the mind to get exposed to some of these opportunities. I mean, one of the things I do is I read extensively on technology. First
yeah.
of all, I'm fascinated by it. Second of all, it's the Wayne Gretzky quote. How can you score more? Because I go where the everyone's going to where the puck is. I'm going to where it's going. So if I see AI is doing this and my company's right here, how do I intersect? I can't start here, but what can I work on now to intersect the obvious trajectory? And
Yeah.
that's what the CEO's job is to do, is to follow these trajectories. And when it comes to tax planning, the laws change, but the tax planning strategies really don't. I mean, I've been through a half a dozen presidents in while helping grow tax planning for CPAs, and the tax planning strategies are all the same. Whatever Biden does, I guarantee that everything that we're talking about right now, none of it gets eliminated.
Huh.
Like a health insurance strategy. So here I have a health insurance strategy that will create an asset for the company, will provide better health insurance for the employees, give more flexibility to the company, and it's as a asset on your balance sheet. Those are all wins. You can even borrow against this health insurance company that you would set up and help manage this stuff. Well, yeah, but John, what if someone gets cancer? All of that can be mitigated. So I guarantee that if I present that to an HR director who's a people person, not
Yeah.
a strategic thinker, their eyes are gonna, just like your CEO's eyes glaze over when an accountant talks. The controllers uh, uh, eyes glaze over when there's strategy. They don't do strategy.
Yeah. Well, okay, so if that's been around for a long time and the tax planning is available to us, what are some of the things that we should be doing right now to help to use the tax planning process to actually help me grow my business? As opposed to what we usually think of as like, I just want to pay less, in taxes and do it,
Right. Which is
responsibly, like you just said,
yeah.
and morally, ethically, responsibly. But what are some ways that I mean, the government actually wants to help me grow my business, and there's rules there to help me do that, right?
Yeah, so it's interesting that the government uses the tax code to get us to do things so that it helps society or the economy or whatever. So they're spending a lot of time and energy passing laws. I don't know if you've heard, but Republicans and Democrats generally don't like each other. And if they somehow coalesce to pass a law, and then you take that law to your CPA, and the CPA says, "Yeah, I wouldn't do that. That's risky." That's crazy because the law takes a long time. So the first thing I would recommend is start thinking strategically and use the best question every CEO can ever use in their company. When a controller says you can't do that, you say why?
Why? Yeah.
Why? Because because you can do that. If it's legal, if it's moral, it's ethical. The health insurance is an example. Health. Let's use another example of health insurance. Let's say the company doesn't want to even deal with health insurance anymore. There's a part of the tax code called a QSERA where the entire company can say, you know what, we're going to give everybody $400. We get the deduction as a company. You get the $400, so you don't have to pay taxes on it. So I can give you an additional compensation to cover your health insurance. I don't have to pay FICA on it. I don't have to pay the match on it. All that is a reduction in cost of the company, still a write-off of the company, and it's a benefit to the customer, to your customer, which is we, your employee, and you can create a flat number. See, I'll do $500 a year, and it's called a QSERA. That's in the tax code. Actually, that's actually new tax code. And then
Wow.
you never have to do health insurance again. You're going to want it, and you can leave it at 500 for 2 or 3 years, and then someone's going to say 500 is no longer enough. Great, we'll raise it to 600. But now you don't have to do. That's that's a tax strategy. That's a health strategy that you'll never get from a health insurance agent, because the health insurance agents, that $500 going into a premium. You're not just sending it to the employee. The employee gets to choose. So you're giving the choice to the employee. That's a strategy. So, this is the job of the CEO. How do you find this stuff? Guys like you, and there's plenty of podcasts out there, but you just have to search for it. There's lots
Yeah.
out there that will help people. Your home office. Many CEOs are working from home. That's a tax write-off. Well, but John, I have an office. There is a tax case where a doctor who has a practice, has a home office, and this is my favorite one, has an office at his lake house. So he was writing off 3 offices, and the IRS said, no, you can't do that. And they went to court, and they lost, the IRS. So we now have a court case that says you can write off an office, a home office, and a lake house office. So that's in the law. Now, if I told a CPA that you can write off 3 offices, there's no CPA that would think that's okay, because the CPAs don't know the law. They're not lawyers. They're accountants. They're numbers historians. What is the number? Where does it go? You're saying, I want to take this number and remove it from a taxable income number. It's a problem. I'll give you another example. I was working with a McDonald's franchise. So the McDonald's franchise had this, we set up a insurance company for them that they funded money into. It's a tax deduction for non-essential stuff. Well, McDonald's didn't know how to treat this asset, this extra expense. So McDonald's requires all its franchise owners to have certain level of assets. And this was siphoning money off, even though the money was still there, and they didn't know how to treat it. So we actually had to teach McDonald's that it was okay, that this was something that was discretionary versus non-discretionary. And because it was discretionary, it was in a different line. I had to fight with accountants on this. Something that they chose to do that they didn't have to do, that benefited their business and them. And we had to fight with the corporate accounting people to be able to do it so that it didn't count against them.
Man,
this is the job of the CEO.
Yeah, that's great. And I've also heard about, like, this is such a crazy time we've just gone through, right? You know,
Yeah.
we're coming out of the pandemic. The government is doing several things to try and help people and individuals and companies come back. Are there any things that you've seen that have come about that we should be looking at for 2021 that is something new? Like, I hear about the R&D tax credits. There's several things that I've heard about, but what do you look at as don't go a day and not take advantage of this without, or think about this for next year?
I would have someone take kind of look at what you're doing and how you're doing it, because there's really not anything new that's coming out. If I'm in the tech space and I know there's an R&D, I'm gonna find that out, because that's gonna be kind of in my radar screen. It's gonna pop up.
Yeah.
You don't need a guy like me to tell you that, hey, there's R&D credits. If I'm ready to open a new branch and in Dallas, and I find out that there's an enterprise zone, I'm probably going to know that. I don't need to go search for that because it's in my purview. What you need to do is kind of get a global look at what you're doing, have someone strategic look at it and say, gosh, there's a lot of things you can save money on here. If you're looking to sell your business, there's ways to organize it so that there's no capital gains taxes on the sale. There are 6 ways of doing that. So if you had a breakout year and you're like, I'm out, and you want to sell it, if I started my business in my basement with zero cost base and it's worth 20 million and I sell it, a lot of that's going to go to taxes, 5 to 10 million, depending on the states and that type of stuff. And I can make it zero legally. You got to always throw that legally in. I can make it zero illegally easily. Taxes, what taxes? So, but legally, there are ways. There's actually 6 different ways of selling a business with reduced taxes. Some with none. Some with. Now, there's also costs. This is where the CEO's strategic is. Hey, if the tax is 30% and the cost of selling it in this methodology is 5%, that's an obvious, easy decision. I'd rather pay this firm 5% to legally structure it than pay the government 30%.
Yeah.
I've had business owners say, I'm going to have more money than I've ever going to make. I'm not going to use any strategic tax planning. I just pay the government. I think that's kind of nutty, but I get it.
It's their own prerogative, isn't it?
Yeah, it's their prerogative. And, this guy was in his late 70s. He's like, I just don't want to deal with it anymore. And your thing's going to take a year. I'm not going to spend the money. So, and I want to give it to my family because they're just going to fight over it. So just think strategically, but there's nothing really they can do, but there's lots of things they can do personally. There's ways to siphon off money. There's ways to restructure the way the company is compensating them. when we took our company public, I was criticized in an analyst as to how I was getting paid. Well, I didn't have to explain myself because I don't really care what the analyst said, because what difference does it make if I pay myself to a separate company versus I
Hmm.
pay myself as a salary?
Right.
The number was the same. But for me, I was able to, by paying, having the company pay me as a consultant to the company, that asset, I was able to do stuff within that that I couldn't have done if I just got a salary.
Yeah.
So that's where we can help the CEO individually. So usually what I do is I start with the CEO and talk to them about their individual taxes, and then those ideas start to filter down into the business. Remember, it's how you make money. Here's the analogy I use. The money that you make comes in on one side of a chasm, and for you to get it from the business side of the chasm to the personal side of the chasm, so I can buy that minivan, so I can go to soccer practice, I have to get over the chasm. Well, how do I
Hmm.
do that? Got to pay a toll. So you've got different toll bridges. You've got the capital gains toll bridge all the way up to the highest personal income tax toll bridge. My job is to figure out how to get the toll bridge as low as possible, how to maybe spend money. How do I spend money in the business legally for something personal? If I want to get braces for my kids, I got to earn the money, pay the income tax toll. So I earn $1, I pay 40 cents, and I bring it over here and I have 60 cents to buy braces. What if I can buy those braces for the full dollar? You can. There's ways of doing it. We just have to see if you can do it in your company.
I love it.
So
That's great,
it's
John. I
really that
mean,
simple. As that toll
basically,
bridge analogy is the best I've been able to come up with. Is how do I spend a dollar as a dollar? And this is where guys, where I talk to a lot of business owners that love Dave Ramsey and they don't want to have debt, and I say, look, Dave Ramsey is a W-2 employee advisor. You're not a W-2 employee.
right.
Even if you are a W-2 employee, you're at a different level. So the game you're playing is different. It's all about efficiencies of dollars. How do I spend a whole dollar? How do I not take pieces off of that dollar before it gets to me?
Yeah.
And that's all what we're trying to do, is we're trying to use the law to make our dollars be whole as possible. Because if I'm buying braces with $1 versus 50 cents on the dollar, it's cheaper to buy the braces. Same with cars. Leasing a car is a tax deduction. Buying a car and having a loan is not. So if I buy a $50,000 car, it's really costing me closer to 100 if I want to pay cash. So
Hmm.
this is kind of where that Ramsey, he's wrong. Because if I'm a business owner, I can take that 50,000, stick it in a bank account, lease it, pay from that bank account, so still philosophically doing the same thing, but that whole thing is tax deductible. So that's understanding the laws. The laws are different. How can your company compensate you in ways that's better for the company and better for you?
Yep.
That's one way. If they bought you a car, if they leased a car for you, that's an expense that you no longer have to bear. You're getting a benefit from it, but the company's not paying the extra shared taxes. So every dollar that you pay an employee is really a dollar more, $1.20 if you really get into all the benefits. But how do I pay less? In that case, you're thinking strategically, how do I pay my employee $1, make the employee happy that I'm paying them literally less money, because some of that money is hidden anyways. Employee doesn't know
Hmm.
that's a benefit.
Yep.
So those are the types of the things that we help people walk through. And I'm a CEO too. I kind of am. I'm doing another startup within a larger company, but I think like these guys. I am one of them, so I can help guide them through what they're trying to accomplish. So usually I'll get
Right.
on a call for a few minutes and just kind of ask them a few questions and determine if we can help. If we can help, then we'll work on other stuff. But I'm sensitive to their time. My time is valuable. Theirs is valuable. So we want to figure out, can we help you? Is the win big enough to justify the time?
Yeah.
If they spend an hour with me and I can save them $100,000, well worth the hour. If I
That's a
can
good
save them
hour.
$100, not worth the time.
Yeah. No, I love it, John. I mean, I think everybody recognizes that toll analogy works because we know that we're going to have to pay tolls, and there are some that we can do. But boy, if we can go through a safe intersection and make it through all right, that's a good route too. So we
Yeah,
thank you for your time and for helping us see that there's plenty of safe intersections out there to take.
that's what we're here for. Appreciate
Thanks,
it.
John.